You know what, guys? One thing that I really appreciate about the grain and livestock markets is the structure. We know when they open, we know when they close, and what the results are on a real-time basis. Hey, Davis, have you seen who won the Iowa caucuses yet?
Live from balmy Fargo, North Dakota, USA, via Farm Journal broadcast, this is AgriTalk. This afternoon, we will talk with John Doggett from the National Corn Growers Association, then Mace Thornton from the United Soybean Board, and Ryan Findlay from the American Soybean Association. Later, Dr. Frayne Olson from North Dakota State and North Dakota farmer Monty Peterson. But wait, there's more. Right after the news, Varsity Joe Vaclavic from Standard Grain strums on in. I'm handsome newsman Davis Michelson, and now the beloved host of AgriTalk, Chip Flory.
Davis, thank you so much. Welcome to AgriTalk. Glad that you could join us today. We are live at the Fargo Dome in Fargo, North Dakota, at the Northern Corn and Soybean Expo in front of a room full of people. Hey, everybody, let's hear it. All right. Yeah, it is cool to be here and in front of a very large, enthusiastic crowd here.
My own studio audience is freaking out here, too. They're just sort of joining in.
That's outstanding. Good for you. Yeah. We don't want you to feel left out of that, Davis.
They're very enthusiastic, and as soon as I figure out how to pick the lock on this chain we've got to fix to the desk, I am out of here. But so far, no luck.
They are so supportive. My gosh, yes, we've got a great lineup for today's show. Corn was mostly 3 to 3.5 cents higher. That makes it a lot easier to sit up here in front of this group today.
Oh, sure.
Beans 2 to 2.5 cents higher. Wheat held on to close steady to fractionally higher. Live cattle were slightly lower. Feeder cattle modestly higher. And lean hog futures were mostly lower. We'll find out what Joe Vaclavic thinks about that coming up here in just a little bit. Now, we've got a big crowd up here. Yep. We've got a lot of ground that we're going to cover. But if you've got something that you want to talk about, send us a tweet, if you would. Let's go that route today. Hashtag AgriTalk in the message. That way, Davis will be sure to see it and bring it to our attention. All right, buddy. What do you got going on in the news? What was moving the markets?
Well, Chip, wheat futures made an effort at building on yesterday's gains after posting 6 consecutive declines. March soft red futures were unable to rally above the 20-day moving average overnight after closing above the 40-day moving average yesterday. In the final week of January, Chip, the CFTC notes funds were active buyers of wheat, adding roughly 6,000 contracts of SRW wheat for a net long around 48,000 contracts. Buying was, however, limited by ongoing forecasts for better wheat weather in Europe and the Black Sea region. March hard red futures were a half-cent higher, 467 1/4. March soft red futures gained 1 3/4 to 557 1/4. March spring wheat off a cent and 1/4, 531 3/4 there, Chip. No traction for wheat today, it seems like.
Yeah, not very much. And we're going to be keeping a real close eye on what's going on with the European wheat prices. It seems like whatever happens to the European prices right now is being reflected in the U.S. markets too.
Well, corn futures marched higher today. I don't know if march is the right word, but it was higher today on ideas China will fulfill its purchase commitments under Phase 1 of the trade accord. But aggressive sales may not materialize until after the first quarter as China wrestles with the coronavirus. However, ideas China will look to replace food hoarded at the outset of the outbreak is seeding hope for near-term demand. Traders will likely be looking for a close in March futures above 385 as a cue to cover short positions. March corn futures were 3.5 cents higher, 382 1/4. July corn firmed 3 1/4, 392 3/4. December corn closed at 392 3/4, 3 1/4 cents higher on the day. Chip, that July D spread just went nowhere today.
Yeah, nowhere at all. You know, when it comes to dealing with the coronavirus in China, when you start talking about how they were hoarding food, when the outbreak first started, because they knew what it was going to turn into, and so they just drain the inventories. Well, at some point, that's got to be refilled. I think that's why we let the markets determine this kind of stuff instead of trying to manage it ourselves.
Yeah, it's also the same reason I have 14 cases of Vienna sausage stored in my basement.
That's just because you love them.
Bargain buying is beginning to replace panic selling in the soybean market. An overnight rebound in global stock markets in response to China's aggressive tone in fighting coronavirus buoyed soybeans in today's trade. Watchers believe China will step in to purchase soybean oil to keep store shelves stocked, as evidenced by a 66% surge year on year in soy oil imports. Buying is limited by expectations of a record Brazilian harvest. March bean futures 2.5 cents higher, 8.79.5. July beans up 1 cent and 3/4, 9.06 1/4. November 2020 beans closed at 9.18 1/4, up 1 3/4 today. Kind of offsetting news for the beans today.
Yeah, and people are going to say that I'm so tired of hearing about this record bean crop that's coming out of Brazil. Well, tough. Yeah. So what? That's a matter of fact right there. Is the way that it looks, and that is going to be the dominant supply on the export market here for a while. I don't care if China's got to buy $34, $40, $44 billion worth of ag goods. They're going to go to where they can get it cheapest, and for a while, that's going to be out of Brazil.
Mm-hmm. Well, fat cattle futures were mixed in today's trade, with pressure stemming from weakness in the cash and boxed beef markets. But Chip, January's rise in overall beef prices amid historically large production suggests demand is solid, and that supported feeders today. February cattle futures were a nickel lower, 121.62.5. April cattle futures fell 7.5 cents to 120.65. March feeders firmed 85 cents to close at 137.50. And finally, on the snout side, yesterday's higher cutout and cash hog prices added support to futures today, as did word that China will actively purchase protein to stock store shelves. However, news that China will look to sell government reserves weighed on deferred contracts by the close. February hogs were 45 cents higher, 56.75, and April hogs off 40 cents, 62.32.5. Chip.
Yeah, those government inventories might be good for a couple hours worth of supply to a small village in China someplace. Thank you so much, Davis.
10-4.
Let's bring in Joe Vaklovic, Standard Grain. Joe, how you doing? Say hey to everybody up here at the Fargo Dome.
Hey, everybody. How you doing?
All right. So tell me something you like about what's going on in these markets.
I don't like anything.
I knew you were going to give me that.
To speak to what you talked about in the soybean conversation, China's actively buying soybeans out of Brazil right now, very actively, as a matter of fact. The talk is that they'll buy more in February this year than they did in February of last year. So I don't think the coronavirus has anything to do with it. That may be the reason that they tell the U.S. government why they're not living up to these purchase commitments, but I think it's pure economics. I would actually I would be less surprised if they bought corn from the U.S., not necessarily because they need it, but because we're very competitive right now, whereas in soybeans we're not, and we will not be for a long time.
Yeah. Wouldn't you like to see them make some purchases of pork, too, though, try to bring that retail pork price down a touch in China?
Yeah, I'd love to see purchases of anything, because ultimately we want to see this trade deal succeed. It's just at this point in time I can give you a lot more reasons why it's going to fail than reasons why it would succeed.
You really no chance of living up to the terms of the agreement on China's part?
I'm not saying no chance. I'm just saying that the way that, soybeans make up the vast majority or the majority of their usual purchases from the U.S., and I don't see that happening. So I see a situation where, they get part way to the target, they try to renegotiate, and then things could escalate again. They really could.
All right, Joe. Hey, I hope you're wrong on that, but...
me too, buddy. Me too.
Yeah, I know you do. I know you're thinking the same thing. Thanks, man. We'll talk to you again next week.
Yep.
All right, that is Joe Vaklovic, Standard Grain. Thanks, Joe, for filling in for me yesterday afternoon as I was making my way up to Fargo. Okay, guys, come right back, because we've got John Doggett from the National Corn Growers Association up next right here on AgriTalk.
AgriTalk, where we solemnly vow no Nickelback. Oops, check that. Only some Nickelback on AgriTalk. Just a little.
Just a little bit.
Yeah.
All right.
Just enough.
Welcome back to AgriTalk and the Fargo Dome up in Fargo, North Dakota. It's the Northern Corn and Soybean Expo. Having a great time up here and talking with a lot of farmers about some of the challenges that we've been faced with up here in the northern production areas. And I tell you, making the drive over here and coming up on 94 south of town. It's not like every field still had corn standing in it, but I saw enough of it to understand what they are dealing with in this area, and it's pretty tough. Let's have a conversation now with John Doggett. John is the CEO of the National Corn Growers Association. Good to talk with you again.
Always good to see you.
Good. I want to talk about China and this trade agreement because I don't want to say that Joe was pretty hard on it, but I don't know if he's got a whole lot of faith in it. And one thing that I think people need to remember is there's a reason that they said it's going to be $80 billion in U.S. ag goods over 2 years. And there are several reasons for it, but I think number one reason is flexibility, don't you? It gives them some it could be in walnuts, it could be in pork, it could be in corn, it could be in beans, cherries, go on down the list. It's any number of items.
Well, I think what Joe said was they're going to go find the best price on whatever they want to buy.
Yeah.
And if they can buy it here, they'll buy it here. If they can buy it someplace else, they'll buy it someplace else. But they'll go with the best price and hopefully get to that $80 billion.
Right.
But, we think there's certainly some things that they could buy right away, right now, that they can't buy anyplace else. They can't produce themselves. I'd start with ethanol.
Yeah.
1 billion gallons. That's $1.6 billion, $1.7 billion.
Right. Is that energy or is it ag?
Well, that's the big dispute, the one that we spent a lot of time at the U.S. Trade Rep's office. They understand it. They agreed with us, whether that got into the fine print or just the nod of understanding at the conclusion. But, in this country, there are certain people that view it as an ag product and some people that view it as an energy product. It's an ag energy product.
Right. Don't you? It's going to end up being an ag product, isn't it?
Has to be.
Yeah. And then with the DDGs that go along with it, I mean, we'd love to be sending them all kinds of DDGs.
Well, we can. I mean, there's plenty out there.
Right. What did China do with their E10 plans? Are they just completely trashed?
We don't really know. I mean, there's one person. The government is one person in China.
Right.
And the decision was that they were going to be at 10%, and then, we're not quite going to be at 10%, and we don't know what that means, what percentage they're going to be at, how soon they're going to be there, who made the decision. Well, we know who made the decision, but that was it could not have been a more poorly timed announcement from our perspective. It's just about the time everybody was getting excited about phase one. Then we get but never mind this other thing that you were counting on.
Right. Yeah, the timing on it was unbelievably poor. Yeah, we could and probably should be the first in the door to support that ethanol program, that the concept of the ethanol program that they've got in China. Right? Yeah. No doubt about it.
No doubt about it.
Right, exactly. The question that came up here was why not threaten to end all Chinese imports until China lives up to the agreement?
Let me ask the crowd. How many of you have teenagers?
Yeah.
Okay. How many of you have tried to discipline them by taking this away from them for more than an hour?
He's showing a phone. That doesn't work on radio, John.
Where's the camera? But my point is, that's a great question.
Yeah.
All that was made in China. That was made in China. I'm pointing now because we're on radio. I'm going to be pointing at your computer and I'm going to be pointing at the board here.
Right.
We have become so dependent on things made in China.
Yeah.
And we don't know how to make those things here. We don't know how to retool. And the cost would be so much higher. The
cost would be unbelievable. We would have to retool the supply chain out there and get those trinkets, goods, phones, computers, soundboards coming in from other countries that could produce them hopefully as cheap as what China is producing them. We're addicted to cheap Chinese goods.
Sure, but we're in a part of the country where people produce corn and soybeans and wheat not cheaply, but inexpensively. A good value for the dollar or whatever you want. They produce these electronic stuff.
Right. Yeah, so doing this would be difficult. Tell me about the rest of Asia. How much of an opportunity is that for us?
Huge opportunity. We were in Vietnam and Myanmar 2 weeks ago.
Yep.
Just, what I've heard people say over and over again is Vietnam is where China was 15 years ago, and Myanmar is where Vietnam was 15 years ago. So when you go to the two countries, big difference. But that part of the world, those 9-10 countries there, that represents 750 million customers. They don't eat a lot of protein right now. If we could get each one of them to eat a few more pounds of poultry and a few more pounds of pork, and they don't eat much meat or beef, but they will buy some dairy, that's a huge market.
Oh, yeah.
And I tell you what, when in Vietnam, we were talking to some folks, and those folks raising hogs there, might raise 100 head of hogs, might raise a big one would be 200 head of hogs. They get swine fever in there. They kill the hogs. They burn down the barn, and before the ashes are cold, they're figuring out a way to raise chicks.
Right.
And it's a can-do deal. They're going to go ahead and move forward. Nobody's telling them not to do anything, or if they do, they ignore them. It is a can-do. We're going to work our tails off and better our lives, better our country. It was just really interesting. And the other thing that was interesting that I've seen on these trips is relationships are everything.
Yeah. They love to know who they are buying it from. They want to put a face on that product that's coming into there.
We were in a feed mill in Myanmar, owned by a Dutch company. The manager was Dutch, and he started in with all the Brazilian soybeans and Argentinian corn and Brazilian corn and all of the things about Brazil. And it got a little bit much for one of our guys, who finally said, "Well, how many Brazilian farmers have you had in this feed mill in Myanmar?" None. He said, "We have 6 American farmers here. We want to do business."
Right.
I tell you what, it was a whole different conversation after that.
That's very cool. Tell me about poultry in Asia, okay? Because right now, so much of it is still done in a way that there might be, maybe 10,000 birds in a barn, something like that, and it's going to continue to grow.
That'd be a big barn, but you still have a lot of wet markets where you have individual chickens there, and you say, "I want that chicken," and they say fine, and they cut the head off and take care of it. We went to a facility in Hanoi.
This is
they processed 250,000 chickens every week, and and these are coming from flocks of 5, 10, maybe 20,000. They come in baskets.
Right.
And from the time that basket hits the dock to the time they take the hindquarters and the breast and put them in the freezer is less than 14 minutes.
Yeah.
And then they take the rest of the carcass, and there's women just cut these little pieces of meat off of it right and left, and they make chicken sausage out of it. I mean, they cook it, and that takes less than 4 hours. 250,000 birds a week. The same company is building one in Vietnam on the Cambodian border. It will be done sometime April, May, and they will process 2.5 million birds every week.
10 times.
And they're talking about making more of these there. And those birds are eating soybeans, corn, distilled dried grain, and it's coming from this country. And we did not have hardly any corn going in there 15 years ago. Now they're our ninth largest customer.
Okay. I'm going to stay in the export market, but I'm going to talk about taking care of some of our traditional customers. What's the relationship with Japan in general right now?
Relationship with Japan is good. They're our second largest corn buyer. I will say this every time you talk to a Japanese who's buys corn. They never like the quality of our corn, but they never like the quality of anybody's corn. But they always complain about it. But that's kind of part of the whole deal. I think they have Gucci dances there or something. But I think it's not a growing market. Their population is shrinking.
Yeah.
Their population is much older. They sell more adult diapers than kids diapers in Japan, and have had for the last 10 years.
Yeah.
It's a sad thing.
Yeah, absolutely. Give me 15 seconds on South Korea.
South Korea, they're a little bit different market than Japan. They're a good market, but I think that probably our best bet there is through pork.
Okay, very good. John, keep doing what you're doing. Get
Thank
out
you.
there, promote this product around the world, okay?
We're doing it.
Very good. That is John
All right.
Doggett.
Chip, thanks.
He is the CEO of the National Corn Growers Association. When we come back, we're going to start talking about the soybean side of things. We've got Mace Thornton and Ryan Finlay up next on AgriTalk. It's time for AgriTalk's Tech Talk. Pro Farmer Senior Economist Dan Vaught joins us now. Dan, what's the market move that matters the most today?
Hey, Chip, I'm looking at the U.S. dollar again today. The U.S. dollar index suffered a sizable downtrend through the fourth quarter of 2019, but reversed sharply on January 2nd. It then marched up through 40-day moving average resistance in classic fashion. Worries about the coronavirus and its impact upon the economies of less developed countries seemed to power the late January push to two-month highs. Conversely, last weekend's British exit from the European Union and the resurrection of the pound as a singular currency apparently caused a dive and retested a 40-day MA last Friday. However, the greenback rebounded strongly yesterday and followed through to the upside today. It looks like a fresh dollar uptrend is now in place.
Man, we're doing nothing but talking about potential exports here. That's like the last thing that I wanted to hear. Thank you, Dan. That is Pro Farmer Senior Economist Dan Vaught. Pro Farmer members, get your daily advice updates at profarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors.
Man, that's a blast from the past right there, isn't it, Davis?
TCB, baby.
TCB, yes. Welcome back to the Fargo Dome in Fargo, North Dakota. We're live at the Northern Corn and Soy Expo. Davis, before we get back to the conversation, let's go ahead and recap how the market's closed today.
Sure thing. Well, March hard red futures were a half-cent higher at 467 1/4. March soft red futures gained a cent and 3/4 to 557 1/4. March corn futures were 3.5 cents higher, 382 1/4. December corn closed at 392 3/4. That's 3.25 cents higher on the day. March soybean futures 2.5 cents higher, 879 1/2. November 2020 beans closed at 918 1/4. That's up 1 3/4 today. On the livestock side, April cattle futures off 7 1/2 cents to 120.65. March feeders firmed 85 cents to close at 137.50. And April lean hogs fell 40 cents to 62.32 1/2. There's your quick market recap. Let's get back to the Fargo Dome.
Hey, let's hear it for Davis, huh? Let's hear it for Davis.
Oh, stop, everyone. Oh, stop. Stop it.
Thank you, buddy. All right. Mace Thornton is with the USB, the United Soybean Board. He joins us right now. Mace, it's good to see you again. How are things been?
Things are really good.
You've been busy.
Been in St. Louis now for about 8 months.
Yep.
That move across country from D.C. to St. Louis is really kind of a trying thing, but I'm accomplishing it.
Do you feel less swampish now?
I do.
Good. Good. That's a good thing, right?
I haven't cut back on my antiperspirant, but yeah.
Good stuff. Good stuff. And we've got Ryan Finlay. He's with the American Soybean Association. Ryan, it's good to talk with you again.
Yeah, great to be on. Thanks.
All right. First thing, we got another question from the audience here in Fargo. I want to address it here real quick. How do we know anything about Chinese pork reserves? What a great question. How do we know, Mace, how do we know anything reliable on any stats coming out of China?
I don't think there's any way to know that. No. I mean, we have, on the soybean side, we, of course, have our folks on the ground there all about moving U.S. beans. Yeah. They live there, they work there, but there's no real way to get intelligent market reports back out.
Right. And that simple fact is one of the reasons that when we got the phase one deal done, and I looked at that, and you kept hearing all the rumors about, there's going to be that $40 billion. Turns out $80 billion over 2 years with a little bit of cushion here in the first year. And you think, did they just absolutely evaporate their supplies? And the World Board started to give us the global numbers without China, showing just how important it is. Because when a bean goes into that country, it ain't coming out. When a kernel of corn goes into that country, it's not coming out of there, is it? It's there to be used. And if we had a better understanding of what their total supply against their total demand was, we'd have a much better opportunity to help them fill their needs, right?
Yeah, I not to bring up a sore subject here with farmers, but in this country, we're open and transparent, and we still struggle with data.
Yeah.
We're looking at NAS or WASDE and how is that calculated, and now we're looking at China to say, well, what's real and what isn't real? We really don't know. African swine fever, what percentage of the pork population was devastated? We don't know. How much corn do they have? How much soy do we have? There's a big question mark on every data point that comes out of China.
Yeah, no doubt. And trying to understand exactly what we need to do to service that market is not easy. Okay, you heard John up here talking about the development of those Asian markets, and I love talking about poultry. And one of the reasons I do is because when you get right down to it, a broiler is really just a two-legged soybean with a beak, right?
Yeah.
That's good.
That works for us. We like it.
Yeah. So developing that poultry market down there in Asia it's got to be in your top priority.
Yeah, I think it's poultry is huge, no question.
Yeah.
It's animal protein in general, and this goes to Asian countries, Southeast Asian countries that have this ability to move people into the middle class. And if we look at global statistics over the last several decades, it's all about moving people into the middle class. And when you move into the middle class, what do you want? You want to have animal protein. You'd like to have some poultry. You'd like to have some pork. In some countries, it's beef. That's kind of the gold standard. But boy, to be able to sell soybeans and corn to these countries, to see this growth in animal protein, they want it. We have it. It's a beautiful combination if government could get out of the way and just allow us to make the trade happen.
Okay. That's all so important, but it's more important, my opinion, is taking care of this domestic market. Because if we produce the pork, if we produce the beef, if we produce poultry, and put that into the export market, we're adding value to that soybean, to the corn. With every pound of pork, with every pound of beef, with every pound of poultry, goes a little bit of soybean meal and a little bit of corn. And we've got to work with our livestock friends to make this stuff happen, right?
That is exactly why we are so supportive of the livestock industry from the soybean perspective, because soybeans go into those animals.
Yeah. And if we can build those exports up, then we're building up demand for our products here.
Absolutely.
And then it just comes down to the environmental stuff. Because if we can get past that, I mean, it's a little, there's all kinds of questions and all kinds of hurdles that need to be cleared, but it's still good stuff. What's the number one priority?
Trade. No question, it's trade. And
boy, that was quick.
Yeah, we're talking about animal protein. I'll tell you, when we look at phase one with China right now, there are a whole bunch of provisions in that package that is all about getting us to do exactly what you just said. How does the U.S. export more pork, poultry, beef to China? And it's not just the front end of sending them X billion dollars worth. It's really about removing sanitary and phytosanitary issues, knock down those trade barriers to allow us to do it. So I think that's in this agreement, and that's something that we need to hold China accountable to.
Yeah. The big purchases make all the headlines, but it's the gutsy stuff, like you're talking about there, Ryan, is what might have the biggest, longest lasting impact for us.
I absolutely agree. And I think if we were here in 5 or 10 years and we look back on right now, if we're able to enforce the guts of this agreement, that's what's going to be the most beneficial to U.S. farmers.
Okay.
And, we continue to think nothing but positive thoughts about phase one and how that's going to go through. It may just take a little bit longer because of coronavirus.
Right.
Nobody knows that. Again, we don't know. But to go back to the old cliche, don't put all your eggs in one basket. The folks that I work with at the U.S. Soybean Export Council, they have been devoting a lot of attention to markets like Thailand, like India, like Egypt, like Nigeria, with the understanding that these are countries with big population bases. They need protein, and they are in that Asian subcontinent, and they are ready to jump forward as good customers.
It sounds like when President Trump makes a trip to India, he's going to take some kind of a mini trade agreement with him and put it on the table and say, we think we can do this, right? Is that what you guys are hearing?
I think there's a lot of talk about that. But I think India and the European Union would be the top two that the administration wants to pivot to.
Which one would be harder to work with longer term?
Well, which one would be better longer term?
Right.
I mean, that's easy. That's India. From a pure population standpoint, you have 1 billion people, and if you move enough of them into the middle class, it's our conversation earlier, holy mackerel, that would be an awesome market for us on a lot of different levels. But India is its own unique animal. It's very difficult to do trade with India right now.
Oh, yeah. Yeah, no doubt about it. Mace, what's your biggest challenge right now at USB?
I think one of the biggest challenges we have right now is really getting a hold on all of the projects that are coming into us during this new funding cycle.
Okay.
Because we have projects that are checkoff funded, anywhere from market development to really nuts and bolts kind of research projects on the soybean, the plant, sustainability research. And right now, we've got about 600 of those projects coming in. Our farmer directors who lead the United Soybean Board will sit down sometime between now and July and approve about 150 of those projects to really pave the way for success, future success on the soybean side.
Okay. I want to talk domestic market again here for just a second, Ryan, because seems like there is a battle going on in this country to convince the U.S. consumer that the product that we are producing for them is safe, it's wholesome, it's the best food supply in the world. What are we doing to get that message to the consumers? What's having the biggest impact?
I think being able to explain, there was some presentations here this morning at the conference where there was an individual that talked about taking his message to social media. And I think that's awesome. This transparency with a consumer of explaining on a human side. I'm not just going to throw numbers at you. I'm not going to throw a marketing plan at you. I'm just going to explain to you what I do on my farm on a day-to-day basis and why that's beneficial. Why am I no-tilling? Well, it's the sustainability factor. How does crop protection play a role in that sustainability factor? So as consumers, it's us marketing to consumers. We can educate all we want, but in reality, we have to market to consumers.
So if you had $5 million just laying around, would have you used it for a 30-second commercial on the Super Bowl or to support the farmer to consumer connection?
Well, that's easy. From my standpoint, it's all about farmer to consumer.
Okay, so
I agree with that.
So when it comes to why aren't we on the Super Bowl, the answer is
bang for the buck.
Bang for the buck. We need to put that money. It's what you were talking about, Mace, is prioritizing all the different projects that you've got to work on right now, and it can't be easy.
And I was blown away when I saw the scope and the reach of the programs that are funded by the soybean checkoff. It's amazing.
Yeah. Yeah, it really is. It really is. Ryan, thank you so much. We really appreciate you coming out here today. And
thank you. This has been great.
It's been a lot of fun talking with you.
It's always good to visit with farmers and always good to visit with you.
Very good. Mace, it's been a while. It's so good to see you again, man.
Been a while. Probably back in Kansas City at the old NAFB.
Yeah, no doubt. All right, and that is Mace Thornton with the USB. When we come back, we're going to talk the economics of it all. We've got Dr. Frayne Olson and North Dakota farmer Monty Peterson.
The truth is hard to come by these days, unless you listen to AgriTalk.
All right. Thank you so much, Davis. We are here at the Fargo Dome in Fargo, North Dakota. Thank you to the Northern Corn and Soy Expo for inviting us up here. It's been a fun day so far, and we're going to continue marching forward right now. We've got Dr. Frayne Olson. He is a crop economist, marketing specialist with North Dakota State University Extension. He joins us right now. Dr. Olson, it's good to see you again.
Yeah, great to see you too, Chip.
All right, and we've got Monty Peterson. Monty is a fourth-generation soybean and corn farmer from Valley City, North Dakota. He's also director on the board of the American Soybean Association. Monty, it's good to see you.
Yeah, great to be here.
All right, so we have talked a lot about trade, Monty. But I want to we ended up in the last segment with Ryan talking about the domestic market a little bit. We can't lose sight of developing that domestic market for soybeans, especially up here. I mean, it was proven so brutally over the last couple of years up here in the northern production areas that have basically a direct line to the PNW, then to China, that if we don't have some domestic consumption to ease the blows up here on the export side, it gets a little tough, doesn't it?
As was referenced earlier, I mean, the animal ag industry is our number one customer. It doesn't matter whether it's domestic or international, but when you don't have domestic, then you're more dependent on those international markets. So, I think that's something that both the North Dakota Soybean Council, the North Dakota Soybean Growers Association here in the state have recognized for quite a few years. We need to add value to what we're growing here in the state, and and that comes through processing, that comes through animal agriculture.
Right. And when you look at some of the environmental challenges that we are facing, I'm not saying that it's wide open spaces only in North Dakota with lots of room for hog houses and all that stuff. I'm not saying that. You got to do it all right, but there are some opportunities in the Dakotas that we could be taking advantage of.
Well, I think that's true.
Yeah.
I think we have opportunities here that we need to take advantage of.
Yeah, very clearly. On the export side, Dr. Olson, what has this trade war with China? I don't know. I even hesitate to ask, but up in North Dakota, it has meant so much.
It really has. We've been kind of on the front lines of the problem.
Yeah.
Essentially because we were, as you mentioned earlier, we were the front pipeline. We have a direct pipeline from the Northern Plains here into the PNW market. Almost exclusively all of the soybeans through the PNW market go directly to the Chinese market. So when that market disappeared for us, we were really scrambling up here trying to find some alternative delivery routes, some alternative uses, and it really did cause a lot of problems. We had very large basis levels that dropped.
Yeah.
You didn't see a lot of that as much in the Corn Belt, but it definitely hit up here.
Okay. So what makes 2020 better than 2019 up here? What's it going to take?
A really nice spring.
Yeah.
Because one of the challenges, of course, we have is we still have some corn out in the field. We still have some issues, the concerns, obviously, for prevent plant and what's the spring going to look like. And, but beyond that, from a pricing standpoint, from a marketing standpoint, one of the things I've been in my marketing sessions talking to farmers a lot about is that with this phase one agreement, this is not going to be an immediate, sudden, 60-cent lift in the market, which is a lot what people are kind of expecting or looking for. My analogy is kind of like a flywheel. It's going to take a while for it to build some momentum, for this to kick back in, realizing that even on the Chinese side, we have some new rules for engagement here. We have some new operating rules. And even on the Chinese side, they're trying to figure out exactly what this means. What do these new rules look like? It's going to take a while for that Chinese market to open back up. But once it opens back up, once we get that pipeline rebuilt, I do think there's some longer-term opportunities.
Okay, so you've both been called to the office of USDA Secretary Sonny Perdue. He's got one question for you, and that is, should there be a third round of market facilitation program payments? What do you tell him, Dr. Olson?
Oh, boy. Don't throw anything sharp. I'm a bit concerned. I would say be very careful about that.
Yeah.
And I know that there's a lot of desire and need from a cash flow standpoint to try and get the 2020 budgets to work out, to get the operating lines of credit. But I am concerned longer term about the political ramifications for this. Agriculture has been very blessed to have the MFP payments, to have some support because of the damage done as a result of the trade war. However, other industries weren't as benefited. They were hurt equally as bad, but they didn't benefit. And so there's been some political blowback saying, well, why did agriculture get this and we didn't, or our industry didn't get that? And I'm a little bit concerned as we move forward into discussions about the next farm program, about funding crop insurance, what that's going to look like, that there might be some political pushback saying, well, wait a minute, what happened back here? Why were you benefiting and our constituents weren't? So I think there'd be some political issues that we need to be concerned about.
2020 could be pretty tough if there isn't one, though.
Right.
Wouldn't you say, Monty?
Well, I would say to Secretary Perdue that we can't answer that today. We need 30, 60 days from now maybe to see how we have to get through this 30-day period after the signing of phase one. We have to understand if there is going to be some market development coming from that and how immediate that will be.
Right.
We've got to know where the coronavirus is at, Boy, just too much uncertainty to answer that question today.
That is so true. We've got an excellent question that came up here. We're not going to have time to get to it, but it's basically this. Do you go out and take a chance and get that operating loan and farm again in 2020? You do it, right?
Yep, you do it.
Yeah. Would the banker go along with you?
You got to prove that you can repay the loan.
That's right. Guys, thank you so much for the time today. Really appreciate it. Let's get straight to it. Tweet of the day.
Today's tweets are brought to you by Anything But Iowa. The real winners are the people of Iowa, where the political ads have grown conspicuously silent. And now today's tweets. At White Wheat tweet, I would like to stop hearing about Iowa now. All right. At Junior Likes Whiskey, remember when we were just seconds away from World War III? Seems so long ago. And finally, at Plowwife, I get sick of people asking what farmers do all winter with no work. Obviously, we spend all our time scrolling Twitter and bickering with each other. Chip!
That's right. All right. Thank you so much. You guys, thank you. Thank you so much for being such a great host to us up here. We really appreciate it. Come back tomorrow. We got a Farmer Forum tomorrow morning and Jim Bauer tomorrow afternoon. Right here on AgriTalk.